Hello there, this is the Bookkeeping Master on YouTube. Welcome to this video. This is the accounting equation explained. I will teach you the what and why. So what is the accounting equation and why is the accounting equation needed? I will cover everything that you need to know, not just the formula, but why is it actually needed? Why is this important? So what is the accounting equation? It is this: assets equals liabilities plus equity. So assets equals liabilities plus equity. What are assets? Assets are things that the business owns. Things like property, motor vehicles, computer equipment, office furniture, tools, machinery. These things are all assets. Assets also includes any cash that the business owns. So balances in current accounts, checking accounts, savings accounts. Assets also includes debt that the business owns. And that debt is usually debt owed to the business from its customers, so credit, sales. All those things are assets. What are liabilities? Liabilities are things the business owes. So assets are things the business owns. Liabilities are things the business owes. And what does a business typically owe? It owes things like credit cards, overdrafts, mortgages, loans, and money to its creditors, such as trade creditors, suppliers that invoice that haven't yet been paid. It owes that money to its suppliers. Those things are liabilities. What is equity? Equity is money held in the business which is owed to its shareholders or owed to its owners. And generally, equity is one of two things. It's profits withheld in the business, so profits that the business has made that haven't been withdrawn. And that usually shows as something like retained earnings or the profit and loss account. It's also capital put into the business. So if the owners put money into the business, that will go under equity. So assets equals liabilities plus equity. And let's see this on a balance sheet, because this is what it's all about, is understanding the balance sheet. This is a very typical balance sheet. We have our assets at the top, fixed assets and current assets, which total 130,500. We then have our liabilities, our current liabilities and long-term liabilities. We have our equity, and they also total 130,500. Why do they balance? Why are they the same? Well, the assets equals the liabilities and the equity. If we add the liabilities and the equity together, we get 130,500. If we add the assets together, we get 130,500. This is the accounting equation. This is what the balance sheet is all about, is displaying that accounting equation. All the assets of the business, all the liabilities of the business, all the equity, and it balances. The assets balance the liabilities and the equity. Now, the accounting equation could also be displayed like this: assets minus liabilities equals equity. So those who remember algebra back in your maths days, if you minus, say, the equity or minus the liabilities, you can change the formula, move one from one side to the other. That may have gone right over your head. It doesn't matter. But just look at this. Assets minus liabilities equals equity. So we can also do it this way around. So looking at a balance sheet again, but having a total for liabilities rather than adding the liabilities and equity together, just having a total liabilities. You'll see if we had the total assets and we minus the total liabilities, we get the equity. Okay, assets minus liabilities equals equity. And you can see that here. We could also do assets minus equity equals liabilities. So going back to this balance sheet, if you did the assets minus the equity, you would get this total liabilities amount. This is the accounting equation. It's quite magic, isn't it? So why? Why is all this important? Well, it helps you to understand the balance sheet. It helps you to understand this and this. That the assets equals the total liabilities and equity. That this report should balance. It's all about the balance sheet. The other reason why you need to know this information is it should help you to understand double entry bookkeeping to a much deeper level. Now, if you're new to bookkeeping, this may go over your head, but please bear with me. So thinking about double entry bookkeeping, where we have our PEARLS acronym, that is purchases, expenses, assets, PEA, are debits, and revenue, liabilities, sales, RLS, are credits. When you post a double entry transaction, you should be able to see the accounting equation in action. So I have some examples to the right here. So capital introduced, so money put into the business by its owners. Let's say it's $10,000, pounds or euros. 10,000 is put into the business. The bank will be debited, so the 10,000 goes into the bank. That's an asset account. It's cash that the business owns. The bank account on that balance sheet, the cash account on that balance sheet will increase by 10,000. Where does the credit entry go? It goes to equity. So that will also increase by 10,000. So bank goes up by 10,000, equity goes up by 10,000. And this is what you'll see with the accounting equation. When you do double entry bookkeeping, you'll see that the assets, the liabilities, the equity accounts, they're all going up and down together. Loan received. So 5,000 this time. 5,000 has been borrowed. It's paid into the bank account again. So that's a debit entry. It's an asset. Assets go up by 5,000. And we credit the loan account, the liability. So the liability also increases by 5,000. So assets go up, liabilities go up. Expense incurred. Now this one is much harder to get your head around. So if an expense is incurred, and it's the same with a sale, we could look at a sale made, but an expense is incurred, we would debit expense because that's the debit entry, and we would credit the bank if it's been paid from the bank. So the asset's going to go down, let's say by 50. It's a £50 euro expense. So the bank goes down by 50. This expense goes to the P&L. It doesn't go to the balance sheet, but does it? The profit or loss for the business, so the total at the bottom of the profit and loss, goes to equity on the balance sheet. So as the bank comes down, the equity comes down, or in other words, the profitability comes down, which impacts the equity account. So once again, they're moving together. This time they're moving down. This is the accounting equation. I have so many more videos on my website, freebookkeepingaccounting.com. This is the Bookkeeping Master. If this has been helpful, please like, please subscribe for more videos. Please leave a comment below. Anything encouraging is much appreciated, and I'll speak to you in another video.